This is not financial nor professional advice. This video is for entertainment only. Hey everyone. The S&P 500 in mid-March was in the 4100s, and then it shot up to 4600 and something, and now it's come back down somewhat, and it's finished the market on April 9th at 4488, so almost 4500. So we're left with the question of, is this a brief pause in a recovering market, or was this a fake out, a bull trap, and we got caught in it? So I think I'm trying to be hopeful that it's not a bull trap, that it will continue to recover. But a lot of things have been going on. Of course, the war in Ukraine is a big deal. Of course, the Fed keep coming out and crashing the market by saying we're really going to tighten now. That isn't helping for sure. And it's possible that it was a bull trap. And so I've taken a conservative stance. I'm not going to do growth stocks for now, and I'm going to do stocks that are undervalued. If they're not undervalued, I won't do them. And then I will be cautious even within that. So I got two candidates, Devon Energy and Pfizer, that I think have good possibilities. Devon Energy does natural gas and oil. I'm not a big fan of oil companies, but it makes it easier if they also do natural gas, because I see natural gas as a transition to alternative fuels, and hopefully we'll be doing solar and wind more, and maybe some nuclear, which I'm kind of neutral on, because there's both good and bad aspects to nuclear. But I think that's needed as a transition, that solar and wind aren't possible in every area of the country. So we have to take reality into account. The statistics on both these stocks are really looking good. And let's take a look at Devon Energy. Devon Energy, symbol DVN, is about a $41 billion market capitalization. Its price to earnings is around 15, but that's the trailing price to earnings. Its forward price to earnings is only about 12. So that's a good price to earnings, and it's in a strong growth phase. For those of you that love dividends, it pays a dividend above 6%. What they're going to pay in the future will be above 6%, they anticipate. So they have money literally to burn. I hear it being recommended all the time. On Yahoo, they have an overall recommendation of buy, with a lot of them being strong buys. I think 23 out of 32 analysts rated as a buy or higher, either a buy or a strong buy. I like it that they do both oil and natural gas. That makes it easier for me to buy, as I tend to be a tree hugger. So I think we're in good shape on this one. Looking at the chart, it has that nice steady upward motion that we like to see in stocks. So you can probably rest easy at night with this, assuming that the oil price doesn't plunge dramatically, which I don't think it's going to do for a while, especially with this war situation in Ukraine being unresolved. Devon Energy is an undervalued stock, as it's trading for around 62, and its value is north of 84. So we got an undervalued, strong growing stock for needed products for survival. Something that's sure to hold up probably in inflation. Devon Energy has an outstanding earnings growth rate of 46%. Wow. The healthcare sector has recently been showing signs of life, and my favorite in that area is Pfizer. symbol PFE. As you can see on the chart here, its trailing price to earnings is a little bit over 14, but its forward price to earnings is under 10. Okay, so they're making lots of money, and it's because they've been so successful in helping us to battle the flu. It's a very major stock. It's about a $311 billion market capitalization. So it's a very broad, diversified stock that has many medications in its pipeline and has been around for a while and is going to be there for a long time. And it is pumping out money like a cash cow should. So we want to milk this cow, you know. It's also undervalued. Its price is around 55. Its value is around 74. So this seems like a safe company that's undervalued and is pumping out cash and is a needed product, and it has many products in its pipeline. So it's not just a one-trick pony. So this stock is going to continue to pump cash, which is what you want to do in inflationary times. Pfizer is an undervalued stock that trades for 55 now and is valued above $74. And beyond that, they pay a 2.9% dividend, which is better than owning a 10-year bond. Okay, not that that's the most exciting thing in the world, but it's a little bit of a side benefit if you like that sort of thing. Be sure to like and subscribe, and you might hit the notification bell if you want to be alerted to future videos. I will try to keep pumping them out. I'm looking for undervalued companies. If they're cash cows like this one, that's the more the better. So we got to be safe in these types of markets until it gives a decided turn one way or the other. I have the impression the market's still trying to make up its mind, as we all are. Thank you and good luck in your investing. God protect Ukraine and God bless America.